So we will probably kick off right now with the first questions. Overall, everybody speaks about how markets are down at the moment in our industry. However, there's so many deals happening every week. And with that, I probably kick off the panel by asking Susan the first question. So Susan used to be a regulator in the US industry and now advising strategically and legally companies. So from an investment standpoint, being an investor, what is what an investor should keep in mind and look at before actually investing into the gaming space?
Right. Well, the first question that an investor should ask themselves is, what is going to be the scope of the regulatory burden if I make this investment? And as with most things I'm focusing on the US, but as with most things in US gaming, there is no one-size-fits-all ready, set answer to that question. But there are questions that an investor can ask themselves to help hone in on exactly how much burden there's going to be on their company and on them as individuals. And some of those questions are, first, what license does the company that I'm looking to invest in hold? The higher that license is from a license hierarchy classification, the more likely there's going to be more scrutiny. So an operator is going to be looked at more intensely than, say, an affiliate. The next question is, what states is the licensee doing business in? As with all things in U.S. gaming, no two states do everything exactly alike, and the nuances between those states can make a difference in terms of what you'll be asked to do as an investor. You also need to know, is the company public or private? Is it an indirect or direct investment? Is it passive or is it active? Does the investment come with some level of control? Will there be someone put on a board seat, for instance? The higher the level of control, the more scrutiny the investor is going to be looked at. And then of critical importance is, what is the percentage of equity that is going to be obtained in the company? The higher that threshold, again, the more scrutiny that is going to be required. So answering those questions can help you and your advisor hone in on exactly what the burden is going to be. And it can range from having to file nothing to having to file a short form application or disclosure form to a full-on suitability investigation for the investor and its affiliated entities and the leadership. So it's very important for an investor to ask these questions before making the investment so that they're sure that they know what they're getting into and are willing to get into it.
Perfect. And with that, Ron, you're also advising investors that want to get into the space. Are there big differences between the different jurisdictions, looking into the US and also, let's say, Europe, Canada, other jurisdictions around the world?
Yeah, there certainly are differences. And just as Susan said, there's no one-size-fits-all. I will say that there are some commonalities that many of the regulators do share. So if you want to adopt certain rules of thumb, they're out there. So one, you have to understand that the regulator is really concerned about things like proceeds of crime, right? So if I'm making a $5 million investor, the regulator wants to know, where did that money come from? And the investor needs to be able to cooperate and produce that information. And the other thing is control issues. So if someone doesn't have a fitness of character, for example, and suddenly controls 20% of the company, has the voting right to decide the direction of the company, and can't provide, criminal records checks and what have you, that's going to be a problem too. And all regulators will have a look at that. What varies is how onerous is the disclosure, what's the degree of disclosure, what are the certain thresholds that kick in certain kinds of disclosure. But just as Susan said, the investor needs to understand what they are getting into, right? It's no different than investing in a cannabis company in the United States. Imagine waking up and owning 60% of a cannabis company in the United States. You certainly would have done your due diligence before writing that check. It's the same thing in gaming. And if there's one piece of advice that I give an investor, it's to sit down with the founders and get a sense of the market expansion plans. And so, what I mean by that is that in a traditional tech company, when you're talking about market expansion, you're really talking about marketing and, land grab, advertising, building teams. In the gaming space, you're doing that, but you're also going out and getting licenses, and that's very time consuming. It's slow, it's onerous, it can be expensive. And if you sit down with the founders and you ask for, what's your 3-year, what's your 5-year plan from a market to market perspective, that will really shed a light on the obligations that are going to flow forward. And then, related to that is also having a candid chat. If you're coming in as an institutional investor, having a candid chat with the founders about who else is on the cap table. Are they going to clear regulatory? Is my money just going to, sit fallow because we're being saddled with the wrong people on the cap table? So being very forward and strategic looking that way is always good advice.
From a founders and slash a CEO perspective, I think there's probably a totally different view on when it comes to investment and how to handle investors. I would love to kick off with you, Karolina, about your experience in that process.
I mean, I can only echo what's been said already on from an investor perspective, but I think as a founder, it's important that you do your own research as well, and that you're almost persistent in communicating those requirements to your investors, because sometimes you're dealing with high net worth individuals that will just briefly scan through a note that you made about your licensing, where I think you need to be explicit in what kind of due diligence might be required, because not everyone wants to deal with these things. Not everyone can deal with those things. Not everyone understands the differences between different jurisdictions and, as Susan said, the scope that's required for each. So we are startup licensing in 4 different jurisdictions in parallel. And the one thing I've learned is that this is not an area of pivot, because you have, as a startup, you constantly pivot, but licensing is not something you figure out later. It has major impact on your runway because the costs can really stack up very quickly. There is no defined timelines. You never have a guarantee by what time you're going to get a license. There is no specific time in which the license is supposed to be granted. So you have to be really planning this in advance. And we go all the way to the extent of already introducing prospective investors to our regulatory lawyers to give them full extent of what might be required. And I think the biggest challenge comes from the fact that not all the jurisdictions have that guidance even published. And UKGC is one example where it's difficult to know what could be asked of investors, because there isn't a document that was supposed to be published around 4 years ago but never was, and it's a little bit frustrating because there is no checklist you go by. It's totally at their discretion of what they will ask, and it could introduce significant delays, significant impact to your business. So transparency and planning ahead for both yourself and the people that you want to have involved in the business, I think it's super important.
Ron, are there any specifics about iGaming? Andres, about the iGaming space? So you basically have run an iGaming business in Malta and are about to get that into the US. So what is your experience so far with dealing with the US regulatory challenges?
Yeah, I mean, if in the context of investors looking to get into the live casino space, I would take some of the thoughts that I took when building the team. Look at the people in the company that you want to invest in. Have they done it before? Do they know what they're doing? OnAir, we've put together 10 licensed jurisdictions in 15 months being live. And as we embark on the US, working for a H2 3-state go live, there isn't anyone in OnAir who hasn't sort of done this in previous roles before. I think to an investor that would be of value, knowing that they have the ability and knowledge on how to deliver, backing what Karolina said very much. There's no timeline in what is going to take or how long it's going to take. And then within the live casino space, you also have to factor in, you have to build studios in every state. So you have construction projects in line with the regulatory application, and all of the same things the panel have sort of said when it comes to getting your licenses. The other piece of advice I'd say to investors is, what's your risk appetite for speed to market? So do you want to run all of this in parallel? At one end, you'll either have the license and not the operations, the technology, the hosting, or do you want to have everything ready, burning money, waiting for your license? So while you're evaluating your risk appetite and the team of the company that you're looking to invest into, have that in mind, and how quickly do you want to get your company to market in the US?
Sounds like regulations make it not always easy for people to invest into our industry. Susan, so what are the challenges that you've been seeing, and what are the best solutions? Is there something like good practices? What states are easier? Are there any states easier or more difficult?
That's always the question that's asked, what state is easier, and there is no answer. It depends on who you are, what you're doing, what your background is. There are just 1,000 questions. But to build on what will make it easier, I think, an easier road, to build on what Karolina was saying for an investor, is that if you are looking to get into the gaming space, make sure that that regulatory impact is understood by you and by your entire organization. So a critical factor is to educate the whole organization on what that impact's going to be. Not just one shareholder, not just one entity, but the whole organization. If someone is going to be required to complete a suitability application, show them that application and make sure that they know what they are, again, getting into. The last thing that you want is to make an investment and then be fighting with a director about getting a multi-jurisdictional or some other application. And also recognize that in the investment space, there are no legalized gaming companies that aren't going to have a provision in their agreement with you that doesn't say you have to comply with all gaming laws and regulations, and that could include going through a suitability and licensing process. So I think it's just really critical that there's full disclosure within an organization so that everyone is on the same page, again, before that investment is made.
So Ron, there are a lot of interests that has to be taken care of when it comes to investment. And from like my own perspective, does it make always sense to have a lawyer like being involved and kind of like handling the different parties to make sure everybody's interests are like taken care of in the same way?
Yes.
That was my answer. Well, so the short answer is yes. I think the nuanced answer is you should have a lawyer's phone number in your back pocket. That's the way it goes. And you should know what you don't know. And don't be penny wise, pound foolish. So, my firm, for example, we've been very, very busy with Ontario applications this year, and we offer, we've created packages. We offer an extremely light package where you've got a robust regulatory, legal, and compliance team, and you kind of know your way through this. And that very light package involves us picking up the phone and making phone calls and answering questions on the fly. And on the other end of the spectrum, we have a very robust package where we do absolutely everything for you. So that's why the short answer is yes. That's why the nuanced answer is make sure that you've identified compliance and regulatory counsel to help you out. But that's not the only thing that you should seek assistance from a lawyer. So, we were talking about having some down the road issues with an investor who isn't going to want to play ball with respect to compliance requirements. So what we've been telling both, on the issuer side and on the lead investor side is it's probably a good idea to have some corporate documents in place that can compel investors to play ball, right? So, whether it be a shareholders agreement or a bespoke share ownership agreement that says, hey, if you don't cooperate, there's going to be ramifications, right? We really like that. And we also think that, it may seem a bit, heavy-handed to some of the junior shareholders, but if you explain to them that this is really so that this is a directors-led company as opposed to a shareholders-led company. We always hear that in tech, right? We want a directors-led company. We don't want a shareholders-led company. We want the directors to drive the vision of the company forward. Well, that's all good and fine from a corporate perspective, but that could be hijacked from a regulatory perspective, right? If the shareholder is saying, not interested. And it doesn't have to be, an unsophisticated shareholder. Right? But we're working on a deal now with a very sophisticated private equity group. It's their first foot in the gaming space. And they, frankly, I don't think they really care about the investment that much. And they've moved it to the bottom of the pile. And they don't realize that we've got time constraints and we have relationships with regulators and we need to meet our obligations with them and we need to show, credibility and trust. So, having those pieces in place is really, really helpful just to drive the company forward.
So Karolina, I expect or I would think it makes sense to kind of clarify those things up front. Is that your experience as well?
Yeah, for sure. And I think it's a experience that is counterintuitive for a founder because you essentially shooting yourself in the foot before you even get going with the investors because you have to go in, you have to give them extensive shopping list, what we call shopping list of things that we'll have to comply with. At the beginning we were very open to all kinds of investment tickets, whatever money you want to give us, we'll take it. And then we realized that the smaller investors don't necessarily pay off when it comes to due diligence that you have to do on an investor on multiple jurisdictions. It will actually cost you as much as you got from that investor, so it doesn't really make sense. And then there are things which we didn't consider about licensing, that there are licensing costs and licensing complexity, but then comes also the overhead, your head of compliance, your compliance coordinator, and on top of that, you're paying lawyers because you need to have a very specific structure in place if you're going to license for multiple jurisdictions in parallel, and you don't consider things like equity that you give to your employees, and you end up with developers having to fill in Ontario disclosure applications because you've given them growth shares which are not vested, but they are considered the shareholders. So all these things, if you don't look at them early enough, and some of them we've done right, some of them we've done wrong. As a founder, of course, I don't know it all. But it's just, I would think it's probably the hardest part of being a founder in the gambling industry, the licensing, because it's very, very difficult, and funny enough, the license actually strips you of opportunity to raise funding somewhere else because there are grants, innovation grants, and in Malta, in UK, and for companies like us, which are already determined to be quite an innovator, we are eligible for these grants and for these grants until we get the license. Because until you're a licensed company, you're a software development business, and you can get all the grants you want. The moment you get that license granted, it opens us market access, but it cuts you off from any type of innovation and R&D funding because then you're a gambling company. So it's a minefield to navigate, I would say, in that aspect. And I think I'm learning every day from this journey. So
don't underestimate the time commitment from every individual in the process, CEO to developer, 100 forms, 100-page applications per state. It really takes time, and it takes time away from the business. And you have to focus on that.
Yeah, but on the flip side, you could say that the regulatory moat is what's attractive, right? Not everyone could get into the space. So if you have the sophistication to do it, well, you're ahead of the game, right? So if I get these phone calls all the time. If I get a phone call from a group saying, "We got this great idea. We're going to start an online casino, and we hear they make money. It's going to be fabulous." I always say, "Well, call me when you've raised, $5 million and you're ready to spend all of that on just getting your setup right." So there is a flip side.
But if I can add, I think one advice, and this is for founders mostly, I didn't do it at the beginning, but I think an important learning from my process is put a layer of separation between yourself and those collection of regulatory information requests, because you don't want to be jeopardizing your direct relationships with your investors by being the pester on their email every day, asking for bank statement, their latest tax returns, sending them to the police station to get a police conduct. You need it, but you want it to be your head of compliance. That is their job, to be doing that, where you can just go for dinner the next day and pretend you didn't ask for anything. Because otherwise it really starts to put you in this guilt tripping. You start to feel guilty. There's nothing to be guilty about. It's the reality of the industry. But it does, change the dynamic of the relationship slightly.
Yeah, but you as a CEO and founder don't want to deal with that, right? It's easier to
be
have
honest, I
like your
don't.
mouthpiece with the experts.
But not everybody can deal with this because this is also highly confidential information, right?
Yeah.
So it's not everybody in a company that you're comfortable exposing to this. And something we talked about it later is that it varies between the jurisdictions, but whereas in Canada, you can upload these documents to the portal yourself, and I think in US as well. In the UK, you cannot do without the lawyer. You have to have it run by your regulatory advisor. They have to check if this is the right format, is the name of the bank on the bank statement, is the right signature, does it cover it all? And it's a huge expense for a startup. So for sure, having investors that have done it before and know what to send is also easier and limits your costs. But yeah, I would just advise, don't try to do it yourself. Just get people to be that layer between.
Okay, we have 1 minute left for questions. Seems like everybody's pretty clear on how to get licensed in the US.
Laila, if I can add one more thought.
Please.
And so this is a trouble spot that I see come up a lot. Oftentimes when a gaming company starts up, they feel compelled to set up these exotic structures. So if you think you're investing in the parent company and you've satisfied yourself that the parent company holds the IP, it's really important to have a look at the whole org chart and see what's really going on under the hood, right? And case in point, why does a subsidiary have a nominee director? And under the nominee director agreement, is he or she compelled or off the hook with respect to regulatory compliance, right? Most nominee directors will say, I'm not disclosing anything, good luck. And so it slows it down. So have a look right through the org chart. And then also have a look at all the cap tables through the org chart too, right? A lot of people forget that.
And talk to the regulator before you get in so that you can understand what exactly is their interpretation of a regulation. I always advise clients, you can't just read at face value an interpretation or a regulation and understand how that's being applied. You need to have conversations with the regulator, and if you're going to do a restructuring, do it before you make the investment, because if you do it after, the regulator could suspect that you're trying to circumvent the regulation by restructuring. You want to get all of that, your ducks in a row before you enter any jurisdiction.
That's great advice. And with that, I thank my awesome panel.
Thank you.
Thank you.
Thank you.